In this video, you are going to learn the two most powerful candlesticks pattern that never fails if properly utilized. In the first diagram, you can see we have the engulfing patterns. It is of two types. We have the bullish engulfing and the bearish engulfing. We have the harami pattern. It is also of two types. We have bullish harami, as you can see here, and the bearish harami, as you can see here. However, the engulfing pattern is the opposite of harami pattern, vice versa. Without further ado, let me take you through the chart where you can learn how to utilize them properly in order to maximize profit. Whenever you open the chart, the first thing you ask yourself is, which structural position of the market am I in? Because if you're on the wrong side of the market, you end up falling for those which represent themselves at the wrong side of the market, and at the end of the day, it will be like a fake out. Once you take the trades, market then start going against you. Okay? So that's why the structural position always matters. From the chart, we can see that here, market is actually in an uptrend. Higher highs, higher low, higher highs, higher lows, higher highs, higher lows, higher highs. We can't really consider this side because of what? It's not higher than this previous high. So we take this one, higher high, higher low, higher high. So we notice that this market is what? In an uptrend on a daily time frame. Okay, so if that be the case, then we can now establish our zones, our significant zones. Okay, this is a significant zone. We can tell as well here is a significant zone. Here is a significant zone. We have this zone. We have this one as well. Okay, we draw all our significant zones. This another one. Here's another one. This another one. And also this one. Once we've established this one, then we now go to what? Our entry time frame, which is the 1 hour time frame. So now that we now know the structural position of the market and our major zones, we are now going to look for bullish engulfing pattern and bullish harami pattern in that direction and see how it looks like. Okay, like right from the beginning, we can see here, right from this here, price form what? Bullish harami, followed by the up close candle. This is the bullish harami. Secondly, price form what? Bullish engulfing at the same level, you see. So take note, always whenever these two candlesticks pattern form at a level or form in the same level, trust me, that is a significant and a very good quality trade you can take. Bullish harami followed by bullish engulfing. Trust me, with no hesitation, you can take that trade by risking nothing less than 30 pips. Okay, secondly, here we can see at this level, okay, price form bullish harami. It came down again. At this level, what happened? It forms what? Bullish engulfing. Okay, it tends to go up. For the very first time, it has given us a confirmation here. You see, when it came to the same zone, you see, it drops. It forms this bullish engulfing. Okay, it came back to our zone and rejected. By rejecting it, it forms what? Bullish harami. So bullish engulfing plus bullish harami, a clear trade opportunity which you can take by what? Risking nothing more than 30 pips. Just relax and see how the trade plays for you. If you are risking 30 pips, make sure your take profit should be 2 times what you are risking, or at most 3 times what you are risking. Okay, at this level also, when price came to this zone, it rejects by creating what? Bullish harami for us, by giving us a bullish harami candlestick pattern confirmation. For me seeing this, with no hesitation, I'll take this trade by risking nothing more than 30 pips and look how it plays for me. Here at this level, here is even clear. The moment I see this, I'm going to enter this trade by not risking nothing less than 30 pips and see how it plays for me, because at this zone is our main. Remember, this is the zone we drew on a daily time frame, and price coming to give confirmation at that zone that it wants to buy. Do you think I can hesitate? I can take that trade, but considering my risk management is important. Okay, so this candlesticks pattern, it always works if you are in the right structural position of the market. It will be very difficult for you to lose a trade if you are in the right structural position of the market. Okay, here again, you see bullish engulfing pattern. You see bullish engulfing pattern. Okay, price tends to move higher, but it fails and drops. But as it drops, it fails to close below this bullish engulfing pattern, you see. And by so doing, it created another bullish harami pattern. As I told you earlier on, whenever price and at the same zone gives us what? Bullish engulfing pattern followed by what? Bullish harami pattern. It is always a significant and a high quality trade, which when you take, you can be very, very over profitable. And by me taking this trade, I can risk nothing more than 30 pips. And see how the market spike up. Do you think this is a magic? It's not a magic. So with regards to the bearish harami pattern and the bearish engulfing pattern, let me not even go far. You see this swing to the downside. Let us analyze it in the 1 hour time frame and see. Okay, so this is the swing. This is how it looks like in the 1 hour. So now, as you can see clearly, it was trending to the downside. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So we already now know the structural position of this point in time in the market, okay, which was trending to the downside. So this is where now we have to be only looking for our what? Bearish harami and what? Bearish engulfing pattern. Okay, so but let me mark this level so that we can draw our key zones in the 4 hour time frame. Okay, let me go back to the 4 hour time frame so that we can mark our key zones and see how this candlesticks pattern forms with respect to those zones. Let me take this one off. All right, so we notice this zone here, this zone. Good. We have this one here. Good. We have this one here. Good. Mind you, we have this zone here. 4, which is good. Also this one here. We have this one as well. Lastly but not the least, this one to the downside here. So now we can now go back to our 1 hour time frame. Okay, so this is our 1 hour time frame. Now with the zones we establish in the 4 hour time frame, this is how they look on the 1 hour time frame. And we've already determined the structural position of the market, which was trending down. So we're only going to look for bearish harami and what? Bearish engulfing pattern in the direction of this trend. Okay, so now we start right from zone 1. At this level, price can break according to what? Doe theory of market structure. Already, when this level was already taken out, got intercepted, that was why that signals the beginning of new trend and the end of this trend. So right from here, we look for our what? You see, price came all the way to this level and gave the green candle followed by the down close candle. You see, this is the harami pattern followed by bearish engulfing pattern. You see, this candle engulfed by this other candle. So as I told you, harami pattern plus what? Engulfing pattern, whenever they form, is a very significant trade you can take with no hesitation. So by me seeing this, the harami pattern which formed followed by this engulfing pattern here, this is where I'm willing to take my trade by risking nothing more than 30 pips and see how it plays. By the way, this logic is very powerful. This trick is very powerful. Whenever harami pattern forms followed by an engulfing pattern, it's a very significant trade you can take. Look, this was about 199. closer to 200 pips, almost. Yeah, you see. So when price came again at this level, it bounced up. Okay, mind you, we're only looking for this candlestick pattern in the direction of this trend. Okay, here we notice when price came up again, it forms what? Bearish engulfing pattern. Okay, it then consolidate, went up again, it forms another bearish engulfing pattern. Second form, it forms what? Let me zoom out so that you can see properly. Good. Here you saw bearish engulfing. Price tends to move down, it consolidated, it went up again to collect more liquidities. Here you see it also formed bearish engulfing, followed by what? Bearish haraming. Whenever these two forms at the same time, is a very strong confirmation for us to take that trade with no hesitation. Look, engulfing, it's even formed for the very first time, second time, then followed by bearish haraming. So the moment I see this candle close, giving me what? This bearish haraming pattern, what I will do, I will enter this trade with no hesitation and by risking nothing more than 30 pips. See what the market does for you. This was even more, it drops over 235 pips. My God. It then bounces up, and as it came to this level, what happened? It forms bearish haraming. It even forms 2 times bearish haraming. So this is just a confirmation for you to take this trade by risking nothing more than 30 pips. And you see how the market drops significantly. So you also can now go to your chart. First, determine the structural position of the market. The market is ranging. Is it trending? If it is trending, are you in an uptrend or you are in a downtrend? If you are in a downtrend, only look for what? Bearish haraming pattern like this or bearish engulfing pattern like this. If it is trending, if the market is in an uptrend, only look for what? Bullish engulfing pattern like this, bullish engulfing pattern like this, and what? Bullish haraming pattern like this. You see, like this. So if you like content like this, why can't you consider liking and subscribing so that whenever I drop new content, you won't get missed out. See you in the next video. Thank you. Peace out.